Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 18th of March. Now, coming towards the end of the week, there's just a sense of a little bit of fatigue maybe with this recovery that we've seen in equity markets in recent days, just starting to show signs of a little bit of stalling. The positive sentiment that we've had following on from the suggestion from President Zelensky of Ukraine that the peace talks were progressing and there was potential for some sort of progress, it's just started to eke away a little bit, and it's just starting to sort of come through major markets. You've had a big rebound on oil yesterday, and that's obviously something that has been worrying markets recently, so that will be weighing on traders' minds. But also we've started to see the dollar finding a little bit of support again. It seems as though that some of these major markets have come up towards key inflection points, key crossroads areas, which this could be a turning point once more. So in terms of the data points we've got to look forward to today, nothing really on the economic calendar. We had the Bank of Japan overnight, no change from monetary policy on that front. So no surprises there either. But in terms of the charts we're looking out for, I've got a euro-dollar chart which has rallied quite strongly in recent days, but it's just started to tail off around key resistance, and it'll be interesting to see if that is, again, a turning point. Looking at the gold chart, a nice rebound in the last couple of days as the dollar has corrected back slightly, but again, gold just showing signs of a little bit of an important moment around a key resistance area. And also, once more, the SP500 futures, a nice rally, but again, up towards a key level of resistance. So let's have a look. And onto the Infinox MT5 platform, starting off with euro-dollar. We can see this recovery that we've had on euro-dollar in the last couple of weeks, really, but you can see also this in the importance of this resistance at 1120. That was the initial rebound resistance, and again, we've recovered towards that resistance, but sort of coming back here, you can see the importance of this overhead supply that starts around 1120, but also this downtrend you've got over the past 5 weeks, and it's just this confluence of resistance that is overhead that might start to weigh on euro-dollar. You've got the RSI unwinding to 50. You've got that resistance just coming in, is falling over today. You've got the falling 21-day moving average. All adds in to the sense that this is an important moment, I think, around 1120. If the market can get through that decisively and continue to build to break that downtrend, then the prospect of continued recovery is still on. And then you can start to think about, well, the bigger targets to the upside, obviously initially 1180, but then maybe even sort of 1280 as well. So, but it needs to clear 1120 initially, and the market is falling over a little bit today. Reaction around this sort of band of support that you've got around sort of 1040. That was an initial breakout. 1040 to 1060 will be an important initial support, because if that gets broken, then you're looking back at the uptrend again. But just for now, just a corrective slip at this resistance. The gold chart has had this, well, the strong recovery over the past sort of 6 weeks or so as the Ukrainian war has kicked off, and but since the improvement in sentiment we've seen a sharp corrective move back on gold, but rebounded with this bull hammer candlestick. But interestingly enough, we're still sort of in this little corrective phase, and you've got the overhead supply of this resistance. If I go onto the 4-hour chart, you can see that actually was a head and shoulders top pattern area, and that comes in as a resistance around 1958, just falling over with the 4-hour RSI around 50. Again, that's an interesting moment. If that is a resistance that starts to build at 1950, and the market just falls over, then once more we could see that starts to turn corrective again. You've got this moving average on the 4-hour chart. The 55 period moving average on the 4-hour chart will be one to worth watching, and that's just started to roll over. So again, a more corrective outlook, and this rebound might start to sort of fall over again. Obviously, what we have on this chart is the key support of the reaction low coming in at 1895. That needs to be watched. And finally, S&P futures. Again, another market has rebounded strongly up towards a key level of resistance. You've got the downtrend, and you've got this resistance that comes in at 44.18. And that marks a double bottom base pattern. If that gets broken to the upside, it really would be a strong sign of intent. And you've got this, again, this RSI up towards levels that previously in the selling phase has faltered. So this is key at 55 on the RSI. If it can get above 55 and go towards 60, 65, then that would really suggest recovery in this rally. 44.18 is the key level of resistance, and what we have on the 4-hour chart is just a bit of a consolidation in the overnight period. But the key level of support near term is 43.20. That needs to hold in the sort of recovery phase. But the market is at this really important juncture now of the next outlook move. Thank you for watching this video. I hope you found it informative for your trading. I'll be back again on Monday, where we'll be looking ahead to the new trading week. It's a bit of a quiet one on the calendar, but we'll see where the markets are setting up. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much.